Okay, so the study guide is in module 1, and it's on the exam 1 page. It says exam 1 extra credit and exam 1. It's the very last page in module 1, and it's not attached. It's just in the body of the page on Canvas. So there's 7 total problems on this particular exam, and each of them have a different point value. They range in point value from 10 points to 25 points each. So some of them you'll be studying for one, and then you'll be preparing for a different one too. So there's a lot of overlap in what you'll see. Don't worry to click on the link. It's not going to hurt you. But we're going to go through each of the 7 problems. I gave each of the exam review days 2 days because in Zoom it takes longer than when we're live. So you get 2 days of exam prep before you actually have the exam. The exam is due, I believe, set up as September 19th, which is a Saturday, not this Saturday, but the following Saturday. Okay, so we're going to go through problem 1 from chapter 2 first, which is a 15-point problem. And basically what you're being asked to do is to prepare a schedule of direct materials used, cost of goods manufactured, and then cost of goods sold. Ty, don't stress out. So I'm not going to do the T accounts for this one because the T accounts are not required for this one. If you prefer to use the T accounts just to see the information, that's totally fine. It's up to you. But I'm just going to show you what you need to do for the test. Correct. It's not always the same question though, but yeah, it's similar questions. So these are similar questions to your exam question. They're always going to be different numbers and different problems. And they're pooled, so each of the exams is different. You all have a different set of exam questions that would come at you. And you have 2 attempts to get the highest score. So once you start the exam, you do have to finish it. And there is a time setting, and the time setting I gave you, it's on the exam page, so you can see how long but it's typically a lot of hours that you don't need as long as you prepare. So we're going to start with our schedule of direct materials used. And basically what this is doing is going through the raw materials inventory account. And I apologize because I didn't copy and paste everything from the problem, but it says that the company, for the most recent year, using the amounts described below. So they gave us the beginning balance for some of these accounts and the ending balance for some of these accounts. And then it says, assume that the raw materials inventory contains only direct materials. So for our schedule of direct materials used, we're going to start with the beginning balance of raw materials inventory. So I believe that you're going to have to fill in the words as well as the amounts. So you would have to, I believe it's going to be a drop down that you're going to select beginning balance raw materials inventory. So we're going to go over here. The beginning balance for raw materials inventory is 23,000. And that's what they started the year with. The whole purpose of this schedule of direct materials used is to figure out how much indirect materials they actually used during the period. So that credit to raw materials. So we're going to add in what? What gets added to or debited to that raw materials inventory account?
Purchase of direct materials.
Correct. Purchases of direct materials. And I'm just going to abbreviate it if that's okay with everyone. 74,000. So we're only using each of the items above once. We're not going to use them again. So that's why I'm just checking it off so I don't see it still. And then we're going to subtotal here. And this subtotal is going to be called materials available for use. Right? So we started with 23,000. We added an additional 74,000 in materials. And this is how much in total materials we had available to use during the period. What is the sum? 90.
$97.
7.
Yep, 97. Then we're going to subtract out what we didn't use, right? We did not use the ending balance. Those are still sitting in there. So we're subtracting out the ending balance of raw materials inventory. $25,000 was still in that account at the end of the period. And when we subtract out the ending balance of raw materials inventory, that's going to give us our direct materials used. So 72,
72.
my math is correct?
If I say I concur, does that mean I agree?
Correct.
All right.
Okay. Pretty easy. I mean, you're pretty familiar with that account at this point, correct?
Yeah. It's
Okay.
easy right now, but once we get it on the test, we're just gonna figure out how to do it.
Yep, you're just gonna practice and you won't forget. So schedule of cost of goods manufactured is basically to figure out how much in goods were completed during the period. So we're working through our work in process inventory account. So again, we're gonna start with the beginning balance of WIP this time. So we started the year with a beginning balance of 35,000 in work in process. And then we're going to add in plus manufacturing costs incurred. And that's just kind of a title. So we're going to have 3 different items that we're going to add here. This is where we're adding in our product costs, right? Direct materials used. Okay, and where am I going to get that information from?
The schedule of direct materials used.
Yep, the schedule of direct materials used. So direct materials used during the period were 72,000. Sorry. I'll highlight it so it's really obvious that it's the same number. That's where it came from. Then we're going to add in our next manufacturing cost, which is what?
Direct labor.
Yeah.
Yep, direct labor. Okay, so direct labor costs incurred were 86,000. Cat, that cup of noodle looks good. I love that stuff.
Yeah, it's my weakness.
And then I'm just going to do a little bit over here, manufacturing overhead. We're just going to accumulate those costs so you see where the costs are coming from. So manufacturing overhead is going to include the indirect labor cost, right?
Mm-hmm.
Of 42,000. Insurance on plant is going to be included in there. Because remember, it's all of the other costs of manufacturing that are not direct materials or direct labor.
But it has to do with the plant itself, though, right?
Correct. Yep. Depreciation of plant and building equipment also going to be included. $13,400. Repairs and maintenance of the plant. $3,700. Marketing expenses. Nope.
No.
General and administrative.
No.
No.
Perfect. So now we can total that up. So manufacturing costs, manufacturing overhead costs incurred.
70,600.
70,600. So I'm just going to drag that down here. Manufacturing overhead. And we're going to add this up, those four numbers up, to get our total manufacturing costs to account for.
Is it 263,600?
Correct. 263,600. And then we're going to subtract out what? Because we're trying to figure out cost of goods completed during the period. So that credit to WIP, what am I subtracting out? Here's all the debit
And
side.
balance.
Purchases? No.
Ending balance.
Oh, no.
So less ending balance of WIP. Right? We didn't complete those. They're still in process as of year end. 31,000 is going to be subtracted to calculate cost of goods manufactured. And this is 232,600. So far, so good? Good. Okay, last part of this particular problem is the schedule of cost of goods sold. So we're working our way through finished goods inventory, right? To get to the amount of finished goods, to get through the goods that were sold during the period, that credit to finished goods inventory. So we're going to again start with the beginning balance. So the beginning balance of finished goods inventory, which was given $20,000, is what we started the period with. We're going to add in what?
Cost of goods manufactured.
Cost of goods manufactured. So these goods were completed during the period. They moved from WIP into finished goods. 232,600, and I'll highlight it a different color. And when we add these two items together, beginning balance, finished goods, plus cost of goods manufactured, we get cost of goods available.
252,600.
For sale. Yes. So 252,600. The last step is that we need to subtract out the ending balance of finished goods inventory, right? We didn't sell these goods. They're still an asset. $22,000 is still sitting as finished goods inventory. To back into cost of goods sold. And I will not rely upon my knowledge right now. 230,600. Pretty easy. Think you could do this one?
Lemon squeezy, yes.
Okay. So 15 points for this one. And you may or may not be given the problem that goes along with this, but I'm just going to use it, which is exercise 227A for the next problem. So problem 2.
Really fast, Professor. What are the other problems we could practice like that one? Like problem number 1?
It's all, sorry, it's in the study guide.
I clicked on
Wait,
the study
wait one
guide.
Wait 1 second. I will give you those after the next problem because then they go together.
Gotcha.
Yeah.
And then I clicked on like the Canvas to try to find like the study guide, like with the problems and stuff on it.
Module 1.
Oh, module 1. Gotcha. I did go to module 1, but it puts me
Very bottom. The very
Okay.
bottom.
to the exam 1 at EC.
Yeah. It's the same page.
Oh, gotcha.
Okay, wait. Will you let me copy the table? Let's see. Nope. Okay. Okay. I will shrink it so you can see it. So we need some of the information from above to calculate the income statement. So there's a 10-point problem and it's to prepare a manufacturer's income statement. And before we get to the above information, we'll do the rest of the income statement. Okay. That is worthless. So prepare the income statement for West Nautical Company in exercise 226A for the most recent year. Assume that the company sold 34,000 units of its product at a price of $12 per each during the year. So what's the very first thing that we include in a manufacturer's income statement? I don't care about the title.
Revenue.
Sales revenue. So sales revenue. And since we have to calculate it, I will show the calculation here for you. How do we calculate sales revenue?
Take the units sold, the amount of units sold times the price.
Correct. 34,000 units sold at a selling price of $12 per unit.
408,000.
You are faster than I can even check.
Well, that was because I used a calculator. This wasn't in my head this time.
408 is correct. Uh-oh. Okay. In the manufacturer's income statement, what comes next?
The expenses, less the expenses.
Which specific expense are we going to subtract?
Cost of goods sold.
Cost of goods sold. So since we already calculated it above, we don't have to calculate it again. But we went from the schedule of cost of goods sold, right? 230, 600.
Quick question. On the test, will the cost of goods sold be related to another problem?
Potentially, but you will be given the information. So you may have to go through that whole process in 2 problems. So you will be very familiar with calculating cost of goods sold at the end of this. If it is the problem that is not asking you to do that, if it's just that you need to calculate cost of goods sold, you can use the T accounts. Okay. So when I take sales revenue minus cost of goods sold, what's the calculation? The subtotal?
177,400.
That's the amount. But what's
Oh,
called 177,400 is correct. But the subtotal is called gross profit or gross margin. And I believe they're going to want you to put gross profit, so just write gross profit.
interesting.
Remember, it's systems engineers that are creating this stuff, not accountants. Less operating expenses, right? That's the last thing. So operating expenses, this is where I have to go back up to get them. We had 2 operating expenses. Marketing expense was 77,000, and then general and administrative expenses of 28,500. So I'm just going to list them out. Marketing expense, 77,000. General and administrative expense, I'm lazy, I'm just using the abbreviation, 28,500. They are going to make you total the operating expenses, so I will include that this time. Total operating expenses. Which you're going to add together the 2 operating expenses, right? So 77 plus the 28,500 gives you 105,500 in total operating expenses.
I have a question on the extra credit like study guide. There was a question that like had us do the income statement for a merchandiser and then had us do one for the manufacturer.
Mm-hmm.
And doing those kind of like one after another, I got confused in my head because I was like, oh, well, I already used this information, but I was like, that was for a different income statement though. Are we gonna have, is it likely we will have, okay.
No. Nope. And then, okay, wait 1 second. Alex, yes, I got the operating numbers from above in the table. Operating income is what we're calculating. So 177,400 gross profit minus 105,500, which are total operating expenses, gives us operating income of 71,900. And I can label it if you want me to. So I'll just say gross profit minus total operating expenses gives you operating income, B minus C.
On the test, will it want parentheses around the 105,500?
No, I'll take those out. Thank you. Oh, I didn't put it. They don't even want it here. Just know that you're subtracting it there.
Can you scroll up a little?
Yes.
So anywhere you're saying less, you'll never need the parentheses. So even on the last problem, like
Correct.
$11.
Correct. No, the last problem, you put the parentheses. Sorry. And you know that you just put the minus sign in, it automatically gives you the parentheses, right? That's problem 2. That's 10 points. Obviously, calculating cost of goods sold takes some time, but it's not, you're already doing it for a different problem, right?
So the test will use the other problem for it then?
I can't say yes or no. I can't because it's all algorithmic and you all will get a different problem.
Gotcha.
So, yeah.
So we'll hope so.
Fingers crossed, but let's be honest, it's going to be unlikely for everybody to get that. So just know how to calculate cost of goods sold, which you have to anyways. I got to take the lazy route. So, questions on either of those two? These are problems that you would normally give on a test in class, so it's nothing out of the usual.
And the ones to practice besides them are on the study guide?
Correct, and I'll write those down right now. So I'm just going to list them out. For problems 1 and 2, these are the similar problems. P248B, S213, S214, and some of these are just having you practice part of what you need to know. E222A, E223A, E225A, E226A, which we just did, E227A, P243A, E239B, and then E234B. So
And the answers will be provided in the book after the practice problem.
If you use the study plan, then yes. The study plan is, or the study plan or the extra credit assignment that I have. You're going to see these problems. And you all should know this by now. Extra credit only helps your grade. It doesn't hurt your grade. So if you do it, don't be surprised if you see your percentage grade drop. It has nothing to do with your actual grade. I do it based on points, so don't stress.
There is more than extra credit, right, Professor? Like,
yep, extra credit. It can only go.
Yeah.
And it will help you prepare for the exam.
Extra credit goes into like the homework part, right?
Extra credit just goes at the very bottom. Like you get extra points added in. So it goes towards your total. And
you know,
there is a direct course or correlation between grades that I see on tests with people that do the extra credit. Because the more you practice in accounting, the higher your grade usually is in the test. It's just because of practice. So that's why I offer it, because I do see that you guys really learn it by doing it.
And we're able to enter into this, like we can, because I started working on the study guide yesterday, like I can go back and finish that. It's not like, okay.
Yeah, just like homework.
Awesome.
Exams only one.
Such a gracious teacher.
And you can just do part of it if you want to, right? You don't need to do all the questions.
Correct. Do what you want. Do as much as you want. Do as little as you want. It's all up to you.
Thanks.
Just like financial. It's the same page as the exam. So the last page of the module 1 is where the extra credit. There's a link for both. Okay, we're gonna do exercise 233B for the product versus period costs. We did a similar one before in class, but this is just the sister one. So basically what you're doing is figuring out if it's a product or period cost and what it classifies as. And then you have to address the number of questions and calculations. So we're going to go through this list and identify if it's direct materials, direct labor, indirect materials, indirect labor, manufacturing overhead other, or period cost. I test you on this because it is one of the things that you have to know throughout this class. So I really want you to have a solid understanding of product versus period costs. And it prepares you for the other portions of the test too. So, an airline manufacturer incurred the following costs last month. Wait 1 second. Romeo? No. Stay there. Go back to sleep. Sorry. So, airplane seats for an airline manufacturer. You really would think he's scary. Sorry. Up. Come on. Yep, so scary. Bye-bye. Sorry. Okay. Airplane seats for an airline manufacturer. What does that classify as?
Like
Direct
material.
materials.
Direct materials. So you guys luck out some days when the mailman's late. Or when my dog's asleep. Production supervisor salaries. 110.
Period
That
costs.
MOH other.
So production supervisor salaries.
Oh, production. MOH.
Manufacturing overhead, and then what is it classified?
Oh, I forgot about indirect
Indirect
labor,
labor.
Yep, 110.
Is the test gonna want us to specify? Okay.
Yep. Depreciation on forklifts in the factory. So after we move past chapter 2, you don't need to know the difference. You just need to know if it's manufacturing overhead, but in this chapter you do.
MOH. Other.
MOH other,
MOH other, 90. Yep, because it's depreciation. It's not a material. It's not labor. Machine lubricants, $30.
Direct.
MOH,
It is a type of manufacturing overhead, but what is it?
Indirect.
indirect
Material.
material,
Indirect materials. Yep. It's not a major component piece. It's not worth our time.
I have a question. If we have, so does it not fall under MOH other because it is an indirect material under MOH other? Okay.
So manufacturing overhead has those 3 items.
Yeah.
Indirect materials, indirect labor, and MOH other. Manufacturing overhead other are all intangible. So rent, depreciation, utilities, etc.
Okay.
It's not a physical material or a
The
person.
word is intangible, right?
Intangible, exactly. Part E, factory janitors' wages.
Indirect labor.
Indirect labor, yep, $50. Okay. F, assembly workers' wages, $630.
Direct labor.
Indirect labor.
Direct labor. Physically putting the goods together. Property taxes on corporate marketing offices, $20.
MOH other.
Period.
Period cost.
Period, exactly. And it all has to do with the fact that it's marketing offices. So it's a period cost. Plant utilities,
MOH.
MOH other,
MOH other, correct? Cost of warranty repairs,
Period.
Period. Yep, expenses incurred. So that one, you may just want to memorize that one.
Oh, so that's not. So is that the warranty on the product, or is that the warranty?
Yeah.
Okay.
So the whole purpose of a warranty is to encourage people to buy your products because we're
Yeah.
guaranteeing them. So
Okay.
it's a selling type cost.
Gotcha.
Yep. For part J, machine operators health insurance. So the
Direct
people
material
or
or direct labor.
direct labor. Yep. So the people that are putting the airplanes together, it's their health insurance. You know whose it is. And it's $40. So it is direct labor. Depreciation on administrative offices.
Emily.
Period.
Period cost. That's a 0, 0. Cost of designing new plant layout.
Period.
Period. Yep.
Because it's like
It's a
higher up decision, like an executive decision for that one, or
no. It's because it's a research and development type cost. It's part of the cost of the fixed asset, so it's not going to be. It's either R&D or part of the cost of the fixed asset. It's not going to
What
be.
if
Not a product cost.
What if it was like something about the robots used in the factory, like the layout for those? Would that still be R&D?
R&D. Yeah.
Okay.
For the last one, jet engines, 1,400.
Direct
Direct
materials.
material.
Direct materials.
Lazy. You shouldn't be taking a nap.
Okay. So the part 1 is asking you to total up columns. So direct materials, you only had 2 costs. That one should be pretty easy, right?
1,700.
Yep, 1,700. Direct labor, you had 2 costs, so 670. Indirect materials, $30. Just one cost. Indirect labor was 160. Manufacturing overhead other, 230. And then the last column, you have 4 costs, and what do they total? 510?
Yeah.
Okay. Part 2 is to calculate total manufacturing overhead costs. So what columns are we going to include in this? And I'm just going to write them in words if that's okay.
IDM, IDL, I know each other.
Yep. So indirect materials of 30 plus indirect labor of 160 plus manufacturing overhead other of 230 for a total manufacturing overhead cost of 420. 420?
Yeah.
Okay. For part 3, they're asking you the total product costs. Total product costs include what? Direct materials.
And direct labor.
So 1,700 plus direct labor of 670 plus
Manufacturing overhead.
manufacturing overhead. And that's total. When we say manufacturing overhead, it's all of it. So from above, 420. Right? Because you went through that time and calculated it. So for a total product cost, 2,000 what?
790.
Yep, 790. So 2,790 is our total product cost. For part 4, you're going to calculate total prime costs, which are the two main direct components of our product costs. So we're going to take direct materials plus direct labor, 1,700 plus 670 for a total of how much in prime costs?
2,370.
2,370. Number 5 is asking you to calculate the conversion costs, or the cost to convert those raw materials into finished goods. So it includes direct labor costs plus manufacturing overhead costs. So direct labor costs were 670 plus manufacturing overhead costs of 420. Again, that number is coming from part 2. And our total conversion costs were 1,090. The last question, I think, is pretty easy. Calculate the total period costs because you already have done it. And it's even labeled that, right? So
Yeah.
510 in period costs. Do you find this problem too difficult?
Not this one though.
No, I guess the hardest part is figuring out like the period cost different from the other ones.
Yeah. And it's just practice and knowing that anything that says plant or factory is going to classify as a product cost somehow. And then anything administrative or general is not. Okay. I'm going to give you the problems. So similar problems would be TI 2-2, S210, E2-21A, and then this one that we just did, which was exercise 233B. And anytime you want to practice additional problems, if you look up here where it says learning objectives 2 and 4, you just go to chapter 2 in the study plan and find those 2 learning objectives, and all of the problems related to those learning objectives come up. If you want more practice. Who wants to take a quick break?
Yeah.
Wouldn't vote against that.
Sorry. You guys have to remind me of that one. I never forget in financial accounting, but I always do in this class. I'm sorry. So we know that variable cost per unit remains constant at every activity level. So $1.45 per pizza. Volume level has increased. So we're going to expect total variable costs to increase, right?
Yeah.
So when we sell 8,000 pizzas, how much in variable costs will we incur?
11,600.
11,600, correct. The last one, when I sell 10,000 pizzas, my total variable cost will be 14,500. For total costs, how am I going to figure that out? We're going to add our total fixed costs and total variable costs, right? to get the
Yeah.
total. So 10,250 plus 7,250. When I sell 5,000 pizzas, my total cost will be 17,000.
18,250.
When I sell 8,000 pizzas, my total cost will be
1,600.
21,600. Yep. And then when I sell 10,000 pizzas,
24,500.
24,500. So it's increasing because there are elements of variable costs in there, but the fixed costs remain constant. For this next part, fixed costs per pizza, how do we figure out fixed costs per pizza?
We're going to divide the volume by the total cost.
Yeah, so we're going to take our total fixed costs divided by our monthly volume. So for 5,000 pizzas, we're going to take $10,000 divided by 5,000 pizzas. So on a per pizza basis, the fixed cost will be $2. When I sell 8,000 pizzas, I still incur $10,000 in fixed costs, right? Now I'm going to divide that by 8,000 pizzas. So more pizzas. So what's going to happen to that fixed cost per pizza?
It's gonna get smaller.
A decrease. It's a inverse relationship. Increase in volume decreases the fixed cost per unit. So on a per unit basis, it's now only $1.25 per pizza. And then the same thing goes for 10,000 pizzas. $10,000 in fixed costs divided by 10,000 pizzas. So when I sell 10,000 pizzas, fixed costs are only $1 per pizza, right? It's spreading over the cost of the fixed costs over a higher quantity of volume, higher number of pizzas serviced. So it decreases. For variable costs per unit or per pizza, do we need to calculate anything?
Not say for sure.
No.
No.
Remember, it's
So
constant.
didn't we already do that?
So it's $1.45 per pizza. That's given to you.
Oh,
Oh, yeah.
Okay, so what I'm going to write over here. I'll write what's given to you next to what's given. 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 Right?
interesting.
In class, when students were taking this problem, it always tripped you guys up that I was giving you information that was going to be an answer. So I'm not surprised if you're having the same reaction.
I don't know what's real anymore.
And Alex, yes, the same things will be given to you each time. So you need to calculate the average cost per pizza, and you're adding the fixed cost per pizza plus the variable cost per pizza to get that average cost. So when I sell 5,000 pizzas, my average cost is $3.45. When I sell 8,000 pizzas, my average cost decreases to $2.70. because of that inverse relationship that that fixed cost has as volume increased. When I sell 10,000 pizzas, now my average cost is only $2.45 per unit.
I'm sorry, where do we get that equation?
You're adding the fixed cost per unit plus the variable cost per unit. So these two.
So for the last two problems in the test, we're just gonna have to fill in the numbers, right? You're gonna give us the other stuff like the total fixed cost and all that. Not
Not the previous problem. Yeah, the previous problem they give you the table, the wording, yes.
Okay,
Yeah. Sorry, yes. For this problem, yes, they will give you the table. The last question is average profit per pizza. They dropped in the selling price for each pizza, which is $6.25 regardless of volume. I mean, that's constant. That's really cheap pizza. Clearly not in San Diego.
It's like Costco price pizza right there.
Even cheaper than Costco. Like,
Little Caesar.
They're the hot and nasties from Little Caesar.
Oh, I love
okay.
those.
Touche. Okay, fine. But Costco gives you good quantity for the price. Anyways, moving on. So, selling price is $6.25. How do I calculate the average profit per pizza? I'm just going to go down here.
And you subtract the selling price and the average cost.
Yeah, so I'm going to take this selling price and then I'm going to subtract out the average cost. So at 5,000, we're going to take $6.25 minus $3.45 to get an average profit of $2.80. When you sell 8,000 pizzas, it's going to go up, right? $6.25 per pizza. Well, your average cost went down to $2.70. So now that means that your profit's going to increase from $2.80 to now $3.55. When you sell 10,000 pizzas, it's still $6.25 of a selling price. Your average cost went even further down. It's $2.45 per pizza for a total profit of $3.80 per pizza. Does that make sense? Kind of, sort of.
Yeah. Will we have a question like this on the test?
Yes.
Okay.
Mm-hmm. For part 2, from a cost standpoint, why do companies such as Yoder's Restaurant want to operate near or at full capacity?
Maximize average profit per pizza.
It's maximize the fixed costs that you incur. But yeah, it's going to maximize the profit that you're going to earn. Because if you're underutilizing what you have as capacity, your profit on a per unit basis is lower, and it has nothing to do with the variable costs because the variable costs are constant on a per unit basis, but the fixed costs, if you can actually produce more on a per unit basis, it decreases the cost of those fixed costs. So when I make more pizzas, right? Or I sell more pizzas, I'm spreading out that cost and it's reducing it in half. When I can maximize my capacity, I'm able to better utilize my fixed costs. Because you're going to incur those regardless. So the more pizzas that you can make, the better off you are profit-wise in relation to the fixed cost. For part 3, you have to do a calculation. And this is actually kind of getting you prepared for chapter 6 and then chapter 8, which we're going to talk about later in this class. The owner has been considering ways to increase the sales volume because right now they're operating at an average of 8,000 pizzas. The owner thinks that 10,000 pizzas could be sold per month by cutting the selling price from $6.25 per pizza to $5.75. How much extra profit above the current level would be generated if the selling price were to be decreased? So first things first is we have to figure out what profit we actually have at the current level of volume that we're selling. So current volume. So sales at the current volume is 8,000 pizzas per month at $6.25 per pizza.
Can you scroll down?
Yes, I will. Just let me finish writing that. So we're currently selling 8,000 pizzas. That was given to us above. And our current selling price was also given to us above at $6.25 per pizza. So currently,
Why wouldn't you want to do the average profit per pizza if we're trying to figure out how much profit we're currently making at 8,000 pizzas?
you could, but I'm going to show you what we're going to have to do in a later chapter anyways.
Okay.
So, and I think that on your test, you're going to have to show that full part. That's why.
Gotcha.
So 8,000 pizzas times $6.25 per pizza gives us a monthly profit, or sorry, a monthly revenue of, sorry, I can't do this in my head.
50,000.
50,000?
Yes.
Thank you. Less total costs. So this is easy. It's given to you up here. You already have the total costs. $21,600. So it's total variable costs at 8,000 pizzas plus total fixed costs. So we have it above 21,600. So we're going to subtract that out. To calculate the current monthly profit. So currently, we have $28,400 in profit, correct? In the new scenario, sales is going to increase in volume, correct?
Yeah.
So we're going to increase our volume to 10,000 pizzas sold. And what's going to change?
Selling price.
The selling price is going to change. So we're going to decrease it by 50 cents to $5.75 per pizza. But our total sales is still going to go up because our volume increased by 2,000 pizzas. So $57,500 is what we're expecting in our total sales to increase by, or increase to. Less our total costs. So total variable costs plus total fixed costs. Can I just carry over the 21,600?
No.
No, because it's the total variable costs at 10,000 units sold, right? 10,000 pizzas. So I need to go up above and when I sell 10,000 pizzas, my total costs are going to be 24,500. Because of that variable component. So under the new scenario, profit, what's my profit going to be?
$33,000.
$33,000. So if I was to adopt this, and would you adopt this? Yes or no?
Yes.
Yes, because it's going to increase the profit. So it's going to increase profit by the difference. 33,000 minus 28,400, because we already have 28,400 in profit. So it'll increase profit by $4,600. So is it worth it to the company to reduce the selling price to increase the volume?
Yes.
Yes, probably. If they expect that high volume change, then yeah, absolutely.
I think I actually got this right.
Good job.
I am accounting.
Counting is fine. How do you guys feel about this one? Okay.
So 9.5 out of 10.
Pretty good.
Okay. Practice it. You should be fine. I know you'll be fine. And the similar problem, P46A or P246A. So P246A, P251B, and then anything that addresses learning objective 7 in chapter 2 is going to help prepare you for this problem. Okay. I have 3 more problems, but I don't have to get through them all today. And I want you guys to feel as prepared as ever. So do you prefer if we go on to another problem, or do you want to stop here and then you'll practice some and then bring questions on Monday and we'll finish the rest of the problems? What do you want to do?
What's the rest of the agenda for Monday so we don't like fall behind? Is it just
So
gonna be practice?
Monday, I have it blocked out for finishing up the study guide and then any questions that you have.
That's
So,
perfect. I'd rather like
I
work
think
on
we
it.
should stop and
Yeah.
finish.
Yeah.
yeah, because we just went through 4 problems. I think that your brains probably need to digest it.
Yep.
But we killed these problems though. Like I felt very confident in the class.
I like the attitude, Alex.
Yeah.
Okay, Alex, no, we're not pushing the exam back. You will get through all 3 problems on Monday. So, but nice try though. But yeah, I learned from last semester like how long it takes me to get through the study guide, so I'm pretty confident. You guys will have plenty of time. But I think that if you focus on studying for chapter 2 this weekend and really understanding these, then you'll be prepared for chapter 3 for next weekend, right?
Yeah, for sure.
Yeah.
Okay.
So you said the extra credit is like the homework where we can go through and like redo it a bunch of times and just kind of keep practicing. Okay.
Yep. Exactly.
And if we do the extra credit, we don't necessarily need to go and do the other problems inside the book. Then it's kind of you can do one or the other.
Yeah, one or the other.
Okay.
Or both. It's really up to you what you want to do.
Okay.
So we don't have any homework due this week, or do we have a
No. No, you won't have any homework due. You'll have a pre-assignment due next Tuesday.
Got it.
Yeah. But that's, yeah. Extra credits always due at the same time as the exam, just because so you have all that time. I will pause